not help you with Elliott wave because I have no idea how that works. But what I'm going to do is share my strategy with you today. And I'm going to go through all of the ways that I do Fibonacci. So from start to finish, my preferred methods and all of that good stuff on how it works and all that good stuff. So I'll just jump right into it. And thanks everyone for being on. How many people we got in here? Let me see.
There's about 140.
Oh, wow. Great audience. Well, thank you all for being here. I would love it if you guys would stay active in the chat. I like to communicate with people. So if you guys have any questions, don't feel obligated to stay silent. Please shout out and give me some comments. Okay, good or bad. I love to get the feedback. I love to connect with people. And that's just one of the big benefits for me for doing these events. So Fibonacci training, here's the agenda. We're going to talk first about how to pick the stock, how to find retracement levels, targeting, using support and resistance levels, and Fibonacci and risk management. Great question, Joe. Success rate with Fibonacci strategy. There's really not any way to give that exact answer just because there's so many different Fibonacci signals and so many different ways to trade it and so many different ways that I've traded it. It's just extremely difficult to come out with an exact number, but it's a great strategy, and it's one that I recommend that you test out, right? So there's two ways of testing, and I'm getting already off topic, but that's okay because this is good. There's two ways to test, and I recommend that you start with a back test. Just go back and find some Fibonacci trades and, look for 20 trades and test it out as if you were trading. Do proper risk management, and then after you do that, if it looks good, if it looks successful, then try forward testing, which means actual taking it either in a demo account or in live trading. So you get a real feel for how the strategy works. The problem is that most people don't do the proper testing. And I saw in the previous speaker said that you got to do the work, and that's absolutely true. You got to do the work. And so don't be afraid to do a little bit of work. The reason why most traders are not successful is that there's a lot of different things, a lot of little factors that we can highlight, and I'll try to target them today. But one of them is that you're not willing to do the work and understand if your strategy works or not. Right. And the way that you understand if your strategy works or not is you run a back test in an environment that has all of your parameters locked in perfectly. You have to be able to understand how to identify the strategy, because if you don't identify it, you're just taking dartboard shots. It's just a flip of the coin. It's totally random. You've got to understand how that strategy works so that you can accurately manage whether you're trading it properly. And that's why when you ask for a performance numbers, that's really why it's so difficult to come up with accurate performance numbers, is because most people don't trade it properly. Most people don't draw the fib extensions the way that they're supposed to. How can I say I hit 75% of all my trades, and then you try it and you only do 22%? You're like, well, what's wrong? Well, it's because we have different eyes. We see things differently. We're analyzing the setups differently. So you have to analyze the setups according to the way that you're trading, the way that you see it, and the way that you trade fibs, right? So everybody sees everything differently. Okay, so good question, Joe. Awesome, thank you. All right, so a little intro on Fibonacci. So Fibonacci is a mathematical concept that's really important in trading. It's in all kinds of mathematical areas of our lives, which I'm just been helping my kids with their homework recently. And I've been introduced to some new math, which I was really bad at math as a I was really, really, really bad at math, so if you're not good at math, there's still hope for you as a trader. I hated it, but now that I'm going back to school by helping my son, I've got to learn some stuff, and it's been pretty interesting. It's not as bad as what I remembered it. So I guess when I was younger, I really hated it. Now that I'm older, it's not so bad. But anyways, Fibonacci is a mathematical concept, and it's very important in financial markets, and it really ties in well, and which I'm going to get to, with support and resistance. Okay, and support and resistance. So the very first step we're going to look at is the trend direction side of things. When I am taking a trade, I like to use my fibs in the direction of the trend. Okay, so that's one of the big areas for me. And so I'm going to show you how I find that trend, just one of the ways that I do it. I maintain one of the things that you could do, and I think a lot of you do this. If you do, let me know. And it's you manage a watch list. How many of you have your own watch list of stocks that you like, that you watch on a regular basis? Let me know in the chat if you have a watch list, or in the comments. Let me know in the comments if you have a watch list. So yeah, John does, right? I have a watch list of key stocks that I really like, and I watch them and I just check them, right? And it doesn't take a lot to check the stocks in your watch list. You just kind of do a quick brief setup, and if it looks like it's setting up today, well, then boom. Okay, the other thing that I do, so Joe only trades the US 30, which is awesome. So Joe, you could run this on the US 30, which I think is pretty cool. And, you could do it on a lower time frame and try to find fib moves on the US 30. And the thing about the US 30 is it runs so good. It's a great running instrument. It moves well, so you could trade the fibs, but just test it out and see how it works. So William likes to look at 5, and then the rest depends. So that's what I do. Step 1 is I have a watch list, and I'm expecting you guys to write that down, right, is a watch list. Okay. The other thing that I like to do is I like to go to this fancy little website called FinViz. Okay. FinViz is a great website. It's free. You can pay for advanced if you want. I like it. I've actually never paid for the advanced service, but it's a really good tool. Okay. The free version's amazing. And if I had time to play around with it, I'd probably buy the premium service, but I just don't use it a lot. I just run in and I get my screen and I get what I want. So I have a preset here for profitable growth stocks. And so I just search it. And what I'm looking for with my screen is I'm looking for profitable, right? So I do for profitable on the PE ratio. I'm looking for stocks that are trying to grow with an EPS growth of the next 5 year over 20%. I'm looking for stocks that have an EPS growth as well of over 20%. And I'm looking for stocks that have institutional ownership, right? And institutional ownership means that you're not going to get as large. Oh, wait, hold on. I thought I was sharing this. I put it on the wrong screen. Now you guys can see it. My mistake. I do that a lot because I have so many monitors that I forget which monitor I'm working on. But here's an interesting fact. I'll go off topic from time to time because I think it's interesting. I don't know if you guys do, but I recently cut back from 6 monitors, which I have had 6 monitors for like 12 years. And I just realized it was just messing me up too much. I was like, you know what? I don't need to look at that many charts. I don't need to run that many monitors. And so I finally cut back to 3. And I'm liking it. Took a little bit to get used to, but now I have 3. And the way that I'm doing it is, and I'm not going to show you a picture, but I've got 2 regular monitors and then I have one flipped upside down that's long ways. And I use the flipped up long ways for certain things. Like I have some Telegram signal groups that I'm in. And so I use that so I can see all the signals on the length that goes up and down. And then I also look at like chats, right? Like I have some chats in Slack and in Skype. And so I'm looking at those chats and even Twitter. I put my Twitter feed on the long ways, and then the other ones I have wide. So I'm only really putting charts on 2 monitors. So FYI for those of you that care. But anyways, let's go back to the settings. I'm looking for PE ratios. I'm looking for profitable. I'm looking for growth stocks, and I'm looking for EPS growth, and I'm looking for institutional owners. So when I do that, it gives me a list right here. You can see there's 123. And if we go ahead and look at the thing, there's Airbnb here, right? You can see Airbnb's got a decent uptrend. Not a massive, but you see it just moves really nice. So Airbnb would be a stock that I would look at. And you know, I go through this list, and if I'm looking for something more particular, I might say I might go to the technical side. If I'm looking for something like above the 50, I might so if I need more, like 123 might be too many that day. I could always go here and add anything price above on the 50-day moving average, right? And so now that dropped it down to 59. Okay, and so we could look at some other stocks here. Here's Booking Holdings, right? This is one that's nice uptrend. And so we can start by taking a look at this. I'll add that as one we'll look at. And if you guys have any others you want to look at along the way, let me know. But that's the tool that I use. And if we go on back to the screener, I have a preset, and you can set your own preset. So you just click it with the click of a button. But you know what else you can do is there's just a lot of different searches, because there's fundamental searches, lots of stuff, inside ownership, return on investment, lots of different things that you can choose. So you can just go through and kind of look at them. The technical ones are really good if you're a technical trader, and I like to mix the fundamentals and technicals. I think that having a good stock, like, it's not critical. You can trade stuff that doesn't have good technicals or good fundamentals, but I just like it. It helps me. I trade stuff I like. I trade stuff that's consistently really solid and moving up. Here's another one that just came up, Advance Auto. I know that's pretty solid. So just a little tip for you. It's not Fibonacci, but that's how I find the good stuff, right? Okay. So now that we've got that, I want to show you how I do it on the chart. So that step 1 was to find the trend. Step number 2 is to find it on the chart. So here's one on my watch list, right? I'm always watching Tesla. I really like Tesla. It's been a great stock for me to trade. I've made some good trades on. Actually, Tesla has made the best trade of my entire career. I don't remember the percentage, but it was like a 2,000% trade. I can go back and show you where the trade was. It was amazing. And and that wasn't the only really good trade I had on Tesla, but it was like it was a couple years ago, and it was like in 2021 when it broke out of this trend. I think it was, I'll move this trend line. I took a trade right here on the break of this trend, and got in right here. You can see around 50, and rode it all the way up here. And I had it on some really good options, and the percentage was insane. The return on it was just absolutely insane. And so while we're talking about that, let me show you how we can use the fibs here. And you guys probably know a lot about fibs, but I've got some key things that I wanted to tell you about it. So let's go ahead, and we're just going to put the fib retracement on. And, we're going to run a swing high to swing low here. And you're going to see that they don't always work exactly perfectly. Okay. That's why I have a couple other levels in here. You see, this one went through the 61, which is, some people put the 50 in there. I don't use the 50. I use the 61 and the 76. And so you'll notice that on this trade, it went right to the 76, which happened to also be support at the same time, right? Which I like. You know, I was going to talk about this later, but since this trade is setting up, you'll see that if you have support over right here, see that support, 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 support. This was a 3-time tested support. And then it was actually 4. It tested it right here and then finally broke out and then it came back, right? And so then it came back and then we have a Fibonacci level right at the exact same price. So one thing I really recommend is trying to find Fibonacci levels that coincide with support and resistance. So you might want to add that to your strategy. If you really do that, add that in there, because it went right past the 76 and then it popped right into that support level. All the buyers were getting in. Now, I didn't actually get in on that trade because I was a little bit late. And not that this even matters, because it doesn't matter, but this is on my watch list, because if you ever fall in love with a stock, you get a great trade on it, you fall in love with it. I got a great trade on Tesla, so now I'm in love with it. But I actually took it right here on this breakout. So it was a great trade, but I missed this fib trade. But anyhow, like, we could go and take a look and see if this last setup here, which is a possibility, let's take a look and see if this would have been a fib setup. Okay, so we're going to go fib retracement, run it from swing high to swing low, and you'll notice, take a look at this, right? It didn't, whoops, there we go. So it didn't quite get there. It didn't quite get to the 61, but when you get that candlestick pattern, so that's a whole nother thing, right? We get the support and resistance. Let's draw that line in. We got the fib. I'm a big believer in multiple levels, multiple signals. So we got the fib right here. We've got support. We've got a candlestick pattern. So those are all big clues, right? So if we got 2 things, if we've got, and you know, the candlestick patterns always work well, and especially when it's in a stock that you really like, you throw it on there. So right now, you got the bounce off of here and we got the move. And so I didn't get in on this one this time either. But this is something that I'll even maybe watch on a lower time frame, because I believe this has more upward momentum, right? So this is a weekly chart. Let's go ahead and let's drop it down to some other time frames here. Let's go down to a daily, okay? And you can see on a daily, it's a little easier to see, right? Oh, there it is. It's hitting support. We're at the 61, not quite there, but then we get a setup. We got a candlestick pattern break. We also could draw a trend line. Oh, wow, it broke above the trend line. We got a 10 EMA. It broke above the 10 EMA. And right now, we're having a reversal pattern set up. So I'm like, okay, look at this. We had this big retracement, but then we had a smaller retracement right here. It bounced off the 10, and it's looking to break out, okay? So maybe when it pops 257, we could get into this. And where would we put our stop? I'd put it right back here, okay, around 238, right below those candles, below this 10 EMA. Now, let's go down to a lower time frame here. Let's drop this to a 1 hour and see what that last move looked like. Okay, and I'm going to draw a fib, because this is where you're going to use different types of fibs here. This is a fib on a 1 hour. And look, right there, into the 38, okay? Into the 38, what do we notice? We have support right here. So if you miss the big signal, you could always try to get in on a better signal on a lower time frame. Now, just because you miss it on a daily doesn't mean you have to go to an hourly. You want to make sure that you're always in a controlled environment. You're always doing things according to your plan, and you're always testing, right? You don't just want to jump in there willy-nilly. And I don't even, willy-nilly, which means without a plan. You don't want FOMO, fear of missing out. Trying to adjust my mic here. We don't want FOMO to rule the day. FOMO is bad. Give me a minute while I mess with this. Okay, a little better. All right. So we don't want fear of missing out to be the main reason we get in or out of a trade. So yes, it's okay to go to a 1 hour chart, but make sure you have thought about it, planned it, and wrote about it and tracked it and trained it and documented the results so that you're not just operating out of fear of missing out. Okay. So what else you can do is if you miss a trade, go to a different pair, go to a different stock, go to whatever, and then get in on that. Now, I know that Joe was saying that he trades on the US 30. He might be trading on lower time frames. And so, you know, there's several of these trades. If you go to a 3-minute chart, there's a lot of these trades. So you can just run these all day long and say, okay, wait, is there a Fibonacci retracement here? We can run our swing highs and swing low. Let's check this one out. Okay. So here's one that goes to the 38 and we got a nice move up, right? And that's if you're a scalper. So I'm trying to give you, this is a 3-minute chart. That's not a big move, right? What is this? This is from 250. We'd probably get in here. Nice candlestick pattern. Let me zoom that up. You see that? That's a beautiful candlestick pattern. Went right to about the 50 here, 50% retracement. Okay. We got a nice move. I'd say we could get in maybe around 252. And then it goes up to, I mean, it went way up. This is just today's trading. I think it went, yeah. Look at that. All the way up to 256. So you got a move there. Now let's try another one on the lower time frame. So you can get a couple trades a day using lower stuff. But again, not everybody's a scalper. Don't start scalping, day trading, swing trading. Find out what you like, test it, and then do it. I have done a lot of coaching and training with people, and you know, I realized something. I can't force my methods onto you. If you want to sit in front of the chart and scalp, then so be it. I don't like it, but I'm not saying it doesn't work, and I'm not saying it's good. I've heard some people say that scalping doesn't work. That's not true. Scalping works. If you have a plan, if you test it, if you follow your plan, if you operate with good money management, and if you have a strategy that works. But it's not going to work for everybody because some people don't like it. Like me, I don't like it. Because I don't want to sit in front of the charts for that much time, right? So here's another one, right? This move, after that last move, this one came back and it moved, and look, where'd it go? 61.8. Okay, and so there's another move up. So there's just in today, we had like 3 moves. There was this move, pull back, this move, pull back, and now we got one forming right now as we speak. So let's take a look. Maybe we can get, maybe we'll do a live trade. We got one right here. Okay, and we got a pull. All right, so now we're at the 38.2. Okay, and we've already had a big move on the day, so you know, maybe we don't want to do that. Today has gone up a lot. So maybe it's done with its movement for the day. I have this red line up here. Perhaps that's some support and resistance. Let's take a look at it on hourly. Yeah, so the resistance level's up here. So there's a possibility it could get back up there, or maybe it's tired and it wants to come back down. I don't know. Don't let anybody ever tell you they can predict what the market's going to do all the time, because you can't. It's impossible. Trading is all about probabilities. Trading is about probabilities. And yeah, so good question. I got a question here from somebody. Let's see. Ray asks a question, and he says, is my Fibonacci backwards? Maybe. Let me try something. Let me try something. I'm going to test something out, and we'll find out. But either way, this is a nice little setup right here. We're bouncing off of here. Okay, we bounced off the 38.2, and all right. So I was just going to pull this up on a different platform and kind of give you an idea here. So we got the S&P 500, and I'm going to draw a fib, and we're going to see. So you go from bottom to top, or you can draw it from top to bottom. Let me delete this. So let's draw it from top to bottom. That's how I draw them, because I want to see how the move down. So yeah, I'm not drawing. This is how I like to draw them, from top to bottom, because I want to see. I want to catch this in the direction of the trend, right? I want to catch this on the direction of the trend moving up. So that's how I do it. Okay, so you can see, I'm moving back to this charts, that you can see that price is reacting in this level, and if we get a breakout, we've got a nice consolidation pattern here. Price is consolidating. That's something else you want to look at during the trade setup. You got to realize that consolidation is something that we want to look at. Okay, take a look. A lot of times before you got a big move, you got consolidation. So even here, you'll notice here, see this consolidation. The definition of consolidation is the definition of consolidation is when price is moving back and forth in the same direction, and then eventually it'll break. So right here, you see we have consolidation. Right here's got consolidation. Here's got consolidation. Now we're in consolidation again. And so, we're looking for this, maybe this trend line to break. We got to hit this fib. If this one doesn't break, maybe it'll come down to the 61.8 fib. So let's go ahead and draw some more fibs just to kind of give people an idea of how this works. So yeah, keep your eye on that possible trade. But let's take a look here. I actually had there was another one I was going to look at. Let's see. There was another pair. Well, let's look at Apple. Apple came up in my screener. Apple's always a good one. That's one on my watch list. I like Apple. You should like Apple. It's pretty solid for trading. But let's take a look here. Apple. Let's go to a daily time frame. All right. So Apple, we got a nice move here. Let's draw it. Let's draw a fib. And we're going to draw this big move from top to bottom. And you can see it went right around the 30. And if I drew the 50 in, let me see, I can actually add that in. I can just change these numbers, 0.5. Okay. And did it add it? No. Point, let's see, where'd it go? Oh, wrong. Oh, I didn't put the point, 0.5. 0. about shorting, how do we want to know how to do that? Well, we can try a couple different things on shorting. We could draw it like this from top to bottom, right? So that's how we do it for a short. So right now, if we really see, I like to trade stuff that I believe is going to go down. I'm going to try to short, right? So right now, I would probably not take this trade, but you can see we are pushing the 61.8. But because I think Apple's in an uptrend and I don't want to mess with a short. But this is what I would be looking for, hitting that 61.8, then look for a bearish signal like a pin bar and a trend line break, and then I would take it to the downside. Okay. Now, if we go back a little bit in history and we see when Apple was moving down, then we could do that. But like, okay, right here, we got Apple moving down from swing low to swing low. Take a look. We got this move right here, right off the 38, and then we had a nice move down. Okay. You just draw from swing high to swing low. If you're going for an up trade, a buy, if you're looking for a buy, like right here, you're going to go from here to there. Okay. And so there's different places you can look for. You can look for an entry on the 38, the 50, the 61, and then I had a 76 on there. There's different Fibonacci levels you can set up. Okay, now I want to talk about targets. Targets was on my list, and I want to make sure I don't forget. So one of the big things about trading with fibs is targets. Targets are great. They're absolutely amazing. And let's go ahead and show you how to do targets. So this is obviously in hindsight. We don't know what's going to happen. So I'm going to do one in hindsight, but then I'm going to, so with the targets, you want to do a trend-based extension. So what you'll do is you'll just draw this and that, see that? And then you draw this down like that. And now it gives you potential targets. These are called fib extensions. Okay. And so these are areas where you could possibly target. And so, if you get in right here, you could target the previous high. That's one area. But then you could go to the 0.61, the 1, the 1.272, the 1.61. These are all potential targets. And then the last target is the 2.6, and there's even more than that. I mean, the numbers keep going, but you could put a target all the way up here. So, you could go for a really big target. I usually like to go to the 1.2 or the 1.618, right, as a target. And look, that went right to the 1.618, and then it went down. So now with this current trade that we're running, right? We're going to run this again. And let's take a look. We're going to run the target. So we're going to go from here to the top. We're going to run it down. And these are the targets that are laid out, right? So now if we got in down here on this fib bounce, we could be like, oh, okay, there's some big targets up ahead. And there's a lot of different ways to run that, but using a Fibonacci extension is a great way to identify targets on these trades, especially when they're in a trend, because the thing about a trend is you never know how long the trend is going to go. You never know how long a trend is going to keep moving for. Okay. And so there are some trends that can make a ton of money, right? So let's actually take a look at this Apple on a longer time frame. Okay. Just to show you some of the amazing trends that we've seen on Apple. Okay. So I'm just putting this on a 1 month chart. Okay. Now, this is a monthly chart of Apple. Okay. You guys kind of see a pattern here. actually, let's do, this is insane, right? I mean, look at this pattern. Look at this chart. This is from 2003, right? So when you're trading Apple, you want to be looking for the trend because this thing doesn't have real big retracements. And we're going on 20 years since its last, I mean, even longer, because for a while it wasn't doing that, but you know, ever since 97, it's been amazing. So when you're trading this, especially if you're, you know, you might want to look at it on a longer time frame, pull these back. This is why I like finding the good stocks. I like building that watch list so that I can find the good ones. But this is where extensions really come into play. So let's take a look here. And honestly, we'll run something like this. You know, these aren't even big enough. These extensions aren't even, it would be a nice trade. You'll notice that it went up. How long did it take to get there? From February of 09 to hit the target of, so it took 3 years to hit the target on a monthly chart. So you're probably not going to want to go that long, but you could, you know, especially with something like Apple, that's a pretty nice move because it went from, here it went from $2 all the way up to 17. So you made a massive, you had to wait 3 years, but you made a massive return on your investment there. And so using Fibonacci extensions is a great way to find good trade setup. So let's go ahead and take a look. So Apple was down quite a bit last for the month of August, but once it broke out, you can see we got another fib, right? Fib retracement. You come here, you place the swing high, you find your entry. Oh, okay, 61.8. Boom. Now let's add an extension on there and see where we think the target's going to go. Oh, wow. Okay. So this is just an hourly time frame, but you can see we still got up to 200 for our target, right? And so these are just some ways to help you stay in the trade, because staying in the trade is really important over the long term. So I have a risk to reward chart here that I like to look at a lot, where, you know, if I say, this is my risk to reward ratio, this up on top, this is a spreadsheet that I built. 0.5, that means if I risk $50, I'm trying to make 25. If I'm risking 100, I'm trying to make 50. This is a 1-to-1. That means if I risk $100, I'm trying to make 100. This is a 2-to-1. If I hit a 2-to-1, I risk 100 to make 200, and so on. 10-to-1 means I risk 100 to make $1,000. Okay. And so now if we look at this chart and we look at the difference of, let's just do 10-to-1, right? Because you can see some of these trades, and this is where we talk about risk management, but let's just put this in place here. We got our fib level. Let me zoom up so you can see it. This is what's so cool about this. This is not fantasy stuff. This is not, oh, this isn't real. This is real. This is real, because we can put our stop loss at this fib and we could risk $100. So if we buy, you know, whatever, an option, a stock, whatever it is, we could get a big return on investment. So if we put our trade in here, let's just run this. And yeah, this is hypothetical, but this can be done. Like, it's hypothetical with, like, this stuff is real. This actually works. And yes, it's hindsight, but people do this. I do this. People I teach do this. This is real. So we hit that right on the money, and we'll just put, like, what's the price on that? That's 175.77, right? We put a 50-cent stop on it. Actually, let's just make it even, 175. We put our stop loss at 175, okay? Right here. That's a 75-cent stop, roughly. Okay, roughly 75 cents. Okay, the thing went up from 175 to $189. Okay, so if you're risking 50 cents, let's get that spreadsheet back up there. If this has so the average loss, how much was that? That's 75 cents. Yeah, the loss was 75. And what was the win? We'll go back. Oh, get my chart back up there. 189. So we take away, let's do the calculator. I for some reason I always talk about math. I guess you need to know a little bit, but we go, let's just say 190 minus 175. That's $15. Okay, so we're going to put this in. So the average loss is 75 cents. The average win is $15. That's a 20 to 1. That's not, I didn't make that up. Yes, I'm going back in time, but if you get the right stock, if you get the stocks that move like this consistently, why trade anything else? That's why I was talking about the trends on the front end. Why trade something else when you have something like Apple and Tesla and Microsoft and all of these big moving stocks that do things like this? The S&P 500, why do something else when you can get stocks where you get a 20 to 1? Okay. Now let's just throw this a 20 in here. All right. And let's take a look. So if we're going to risk $500 per trade and we're going to take 520 trades, that's too many. We're just going to say 100 trades, risking 500, and you hit 20 to 1. Here's the amazing thing. You only got to win 5% of your trades. Okay, 5%. That's it. Now, 20 to 1 is big, but I guarantee, look at that. Look at this. This is Friday, August 23rd. It hit 190 today, and I think that was the high, maybe not quite. But this is like 2 weeks. This is like 2 weeks. A swing trade for 2 weeks is a 20 to 1. Is it possible? Yes. Can we find a lot of trades like this? Yes. And even if you only hit 5%, you still make $2,500, which is good. But if you can bump that up to 10%, you're looking at $55,000. That's if you take what did I say? 100 trades in a year. Like, it's worth trying to plan your trades in advance. It's worth trying to use the fibs to get accuracy and to use good risk management to find these trades. I could go through, we don't have enough time, obviously, but I could go through and find a bunch of these. I mean, look at all of them. There's quite a few here, you know. Let's get, like, this goes way back. Like, this thing was up, moving. This has moved up all year. There's been a bunch of these big moves. Okay, so let's just run this one. Right, went to the 50, and then we'll run the fib retracement. Or no, this one to get some targets. Okay, so around the same price, 177, and then you can see this was a little bit, I didn't go back that far, just June, but you can see this was a pretty big move as well. You'd still be in this trade if you held your stop. Oh, it actually went up here went up almost to 200. Okay, almost to 200. So that's an even bigger move, right? So you could have technically done that as well. But the thing I like about it is look at that tight stop loss, right? You see that right here, right on the money, right at 177. The entry was 177.78. you could put a 75-cent stop on it. And the thing just kept going all the way up to 195. And if you would have held on during a little bit of a retracement, it went on to 197. But still, that's still a really, really, really hard or big winner. It's a big winner. Now, you don't have to do that, right? I'm just going to play around with some risk management strategies. You don't have to do that because you could just as easily do a 1-to-1 risk to reward ratio. Okay. And with 1-to-1, you would still make really good revenue if you can hit 60% of your trades, 65%, right? So here's what you got to realize is right off the bat, you're without using any time. Dennis, I see Dennis, you got to start looking ahead, buddy. If you want to try to find the trades, you have to look ahead. You need to look back, yes, but you look back with the purpose of looking ahead, because traders are not going to make money if they're living in the past. You've got to be forward thinking, right? You've got to say, well, okay, I'm finding us seriously, you really think that I'm cherry picking these trades? Apple has been doing this since 1997. If you can't find a trend that has been going on since 1997, there's a serious problem, because it's a 25-year trend, right? I mean, it's so easy, it's almost laughable. But we get overcomplicated. That's where psychology comes in, right? That's where it's like, okay, I could never find a future trend because it's all about looking back. You got to look ahead. You got to say, okay, where's the market going, right? And that's why your risk management is so critical, because guess what? You're going to get a bunch of them wrong. But if you use these fibs in conjunction with a trend, in conjunction with some support and resistance levels, then you can get really nice, tight stop losses and ride out those moves, right? And you don't have to, you know what? And you know what? Maybe 20-to-1's too much, because it is hard. It is hard. Because let me tell you, I'll just, rather than saying everything's rainbows and sunshine, I had a great trade just a while ago, like a couple weeks ago. Let me pull it up. I'll talk about my bad trade. Okay. It was Domino's. Okay. And Domino's, I love Domino's, right? Who doesn't love Domino's? One of the best stocks ever, Domino's Pizza. If you didn't know that, now you know. Domino's is a great stock. So I messed up so bad. I got in Domino's like right here at 325. Okay. And it was an options trade. And when this news triggered, Domino's went up big time, up to 410. I was up like $100, close to $100 on the trade. And it was an option. And so my percentage increase was like a 2,000% trade, right? So when we're talking 20-to-1, I'm not lying. It was like 2,000-to-1. No joke. It was insane in the amount of money that I was up. However, I got greedy and I was like, wait, it's going to keep moving. And so I didn't take the profit. Okay. So when it was up big, I should have just took the profit. And so the expiration on the option started to eat my profits away. And so I got a much, much smaller trade. And so when you're holding out for the really big ones, but 2,000% is pretty awesome. But when you're holding out for the really, 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 really big ones, then sometimes your profit will go away, which happened to me. But you got to play that out and understand that that's part of how it works, right? You're not going to hit it every time. You're not going to always hit the big one. But the good news is we know that we only need to, if we're going for a 10-to-1, we only need to win 10%, 15%, and we can do that. That's really possible if you're using all of the tools that I talked about today, not just Fibonacci's, but the trends, the support and resistance, and all of those things. And so, yeah. I'm going to open it up for some questions here, but I hope that kind of covered stuff, but I wanted to just share some more things because I got my PowerPoint here. What else did I put on here? Oh, I wrote the best way to trade is to trade with a friend. It's good to have somebody to trade with. And I'm not selling a trading room. I will sell you something in a minute, but I like to trade with friends. I like to find somebody and trade with them in a Zoom, just me and him, right? And to give them a call and then to get on a call and discuss a strategy. I'll get together with two friends and we'll discuss a strategy for an hour. Like we'll talk about a trade for an hour, right? How many people are you running by? This is a bonus tip. And that's a picture of me and my wife, by the way, and she hates trading, but she likes money. So she's okay. But anyways, I like to talk with people about trading and strategize and mastermind the trades. It's fun and it will give you a really good edge and it gives you more brain power, right? So find somebody to talk about your trades with. Okay. All right. Now, the last thing I wanted to talk about is my new book. It's called Complete Trading System. Okay. Now, I talk about all of the stuff that I talked about today, except a lot more because it's big. It's a big book. So you can get that anywhere on the internet. Just type in Complete Trading System. It's how to develop a mindset to maximize profitability and your own market success. I don't know why they put that little subtitle because it's got a lot about mindset in it, but it's also, I did already, Dennis. You missed it. I showed a Tesla setup. But I could go back and look at Apple here. But anyways, get my book. You're going to love it. I talk a lot about mindset because it's really important, but I talk about complete system, the complete part of trading, the mindset, the money management, the strategy, and I talk about, I said to trade with a friend. There's so many different components. Everybody's focused on a strategy, and it's kind of like traders get stuck on shiny object syndrome. They're always trying to jump from system to system. Stop doing that. You're trying to be a gambler. Find a system. Petrie, you just go online and type in, maybe David will throw it in the chat, but you just go ahead and maybe sometime we can do a giveaway. I'll ask David. David, maybe we can do a giveaway for my book on the next event we do.
Sure, yeah.
But anyways,
Yeah,
yeah, thanks, David. I know I'm getting close to time, but Petrie was asking about the platform. I use it's whatever broker you use, right? It doesn't matter, any broker. I use TradingView for my charts, but you could use Thinkorswim. That's a popular one. Tastyworks, Interactive Brokers, whatever one you want to use is fine. So, Dennis wanted to see the trade. And so I was actually showing you guys Tesla, and Apple probably has some too, but I was looking at Tesla earlier. Remember, we found today's pullback on a lower time frame, and we were looking at the fibs. And when you're doing a day trade like this, sometimes you can't force a trade. You can't force it, but you can see it pull back. We had the fib. we went from swing high to swing low to swing high. It hit the 38, and then there it bounced. And so this is just a 3-minute chart, but you can see it bounced really nice off of there at 255. And so on a 3-minute chart, it works. It works good on the higher time frames too. But yeah, thanks everybody. And any other questions? David, any comments, feedback? How'd it go today?
I thought it was a great presentation. So
thank you, David. And
thank you
by
for
the
being
way, you're recording this, you're going to post it on YouTube, right?
Yeah. Yeah.
Or are you going to email everybody?
Yeah, it'll be on TimingResearch.com. I'll email everyone subscribed. It'll also be on YouTube, podcast version on your favorite podcast app, and you can find it on Substack too.
Oh, wow. Sweet. That's a good marketing strategy. I'm recording this and putting it on my channel, which is tradingstrategyguides.com. So
right.
we'll have it over there.
Yeah.
And so for everybody that's watching on my YouTube channel, you can also go over to Timing Research. What's the name of your YouTube channel? Timing Research?
Yeah, it's just Timing Research. You type that in to the search, you should be able to find it.
I'll put that in the notes too, in my description when I post it.
Sounds good.
All right. Well, I think that's probably it. But David, I want to thank you for the opportunity, and everybody that showed up and asked great questions. Thank you.